Well, good morning. It's the 30th of October. Let's take a check-in with what's been happening at Asset Class this week. While I'm here by our office here in West London, I'm over in London this week meeting with Philip Kasumu, who's our reasonably new Regional Vice President of Sales for Europe. We got some client meetings, some prospective meetings, so looking forward to getting into that. The UK is a significant market for us, and actually Europe seems to be very active right now, so looking forward to seeing what's happening in the market here. Just on a broader level, I think the European market lags behind the US a little bit in terms of its the speed of rebound. I wouldn't say the US is necessarily in rebound right now, but certainly a lot of activity stateside with some new funds launching. A little bit slower here in Europe, I think. But as I say, we'll get into that this week, so looking forward to sitting down with Philip and getting into some planning sessions as well. So from a company perspective, we have over the next 2 or 3 months some interesting moves coming ahead. We are making a significant move from effectively a project-based company. We've had lots of projects this last year, and whilst it's great to have those projects, we're far more focused on becoming a product company. And so between now and the end of January, we hope to have completed that move. Our products are in great shape right now. I think we have nicely rounded out our IFM product, our DPM product, which is our deal and portfolio management product, being deployed in some very large clients, companies like Capital One, using our product in the US. And as I say, our IFM or investor and fund management product, again, being nicely rounded out with version 3, our most recent release. So that's a move that will be finished by the end of January of this year, and so the last certainly the last 6 to 9 months, and certainly the next 2 to 3 months focused on that. So that's a significant move for the company to make that change. And speaking of the US, we saw news this past week that Bill Ackman of Pershing Square Capital Management announced the fact that they were effectively hedging their short position on long-term treasury bonds, suggesting that the market in the US in particular was slowing at a faster rate than anticipated. He's anticipating the market slowdown happening more quickly, and I think what that points to, from our perspective, is a lot more activity in the secondaries markets. Those funds that are raising, being those distressed funds, perhaps raising a little bit more aggressively. Hopefully this is the bottom, but you can never tell. But I think to hark back to the recent fireside chat that I had with Gene Ludwig of Ludwig Advisors, the key thing is to invest through the market. But we'll watch that one with interest. It is a significant move, and perhaps a harbinger of things to come in the coming months here, but interesting moves. And as we enter November here, last 2 months of the year, November is always an interesting month. We have Thanksgiving coming up in the US, and December with Christmas coming up at the back end of the year. We effectively, I guess there's probably about 6 weeks at best of the year left from a business perspective. We are rapidly closing out our quarter. It's our busiest quarter of the year typically, and lots of deals coming to closure now. If you are one of those deals, look forward to welcoming you as a client in the very near future, and obviously anything that we can do for you, if we're not already engaged in wrapping up the finer details, do reach out. But looking forward to having a great final quarter and great end of the year. Well, that's it for another week. Hope wherever you are and whatever you're doing that you have a great one, and we'll chat to you soon. Take care.